Hello, traders. Welcome to the live stream where we have Bitcoin doing all kinds of things and pretty much at the same price it was at the close yesterday. So 24 hours later, virtually nothing's happened. Intraday, yeah, sure, but where traders are going to settle up in less than an hour, nothing happened. So talking about Bitcoin got as high today as 30,000, and after hitting that 30,050, sells off to $27,226, and then after it falls to that level, rallies about 4%, about $1,100 from the bottom after the sell-off. Crazy price action, man. It's just out of this world. Okay, and so, you know, Bitcoin is up today, 0.07%. Unfortunately, still below 28,800. Yeah, that's real. Still below it. And that's an inflection point that you want to see market participants close above, and that didn't happen. So, a lot of the altcoins got wrecked on that volatility. Let's look at Ethereum. Just massive swings. I don't know if it was as severe as Bitcoin. Oh, it certainly was. It was a little bit more volatile. 10.2% swing on Ethereum today, and right at the same price you were at close yesterday, about 24 hours, same price. All right, so also Ethereum is below its inflection point. It's just like Bitcoin, where you'd prefer them to be above them. Sucks. Yeah, lame, really lame. This market volatility came on, right, rumors that, you know, the government was selling Mt. Gox crypto they had acquired, or they had, you know, whatever, seized, and it turned out to be a false rumor, but the market certainly responded like it was real. And I guess since, you know, Bitcoin being up 4% from its lows, it settled down. So, good God, man. And it's not even really, I mean, that's crazy, but what was most crazy is what happened to FRC today. Halted like 9 different times, right? As an individual stock get halted within a 5-minute period, the asset swings 10%. So if it was halted 9 times, that means it swung 10% 9 different times in one trading session. I just, like, this is insane, man. Like, just absolutely crazy price action. I mean, Druckenmiller says it's the most insane, like, unpredictable type of market he's ever had. You know, 45 years being in the market, and he's never seen anything like this. Which I mean, I believe him, right? This is wild. Okay, so that's Bitcoin, Ethereum, nothing. No change from yesterday. Okay. BNB, really disappointing because of how well it was doing, how close it was, just like Bitcoin and Ethereum, just this close, man, this close to the promised land. Just can't do it. So, but again, at the same time of not being able to catch the bids to break the resistance, still not lower than it was on the 20th. Still just inching on up there, man. Keeps testing it. Market participants keep testing the resistance. And then the buyers relent. Too much supply, over and over and over, but higher lows every time. So, and then that, you know, just, it's wild, man. XRP down 2%. Just insane volatility, man. Right from the lowest low to the highest high. And XRP 11.2% swing in price today. Not normal. It's insane. Okay, I mean, just like down 2%, but just barely moved. You know, just like every other day, just barely does anything ever anymore. Nope. Lack of liquidity will do that. It'll create volatile swings. Yeah. Okay, so those are your big 4 crypto. Cool story, bro. No one cares, because wake me up when they actually do something. Seriously, wake me up when these scrub pieces of trash do something. Here's total. Wow, look at this crap, man. 9% swing on, you know, the entire crypto market. $1.144 trillion worth of assets, swinging 9%. Okay, normal. Sure. Still not broken out. And in fact, all you've done really is look at this like level here. You know, from 2021 was pretty much tested as resistance, and just like, wow, that's just crazy, man. And off the lows up like 4 or 5%. Volatile. Okay, cool. That is like all caps. So what coins got hit the hardest? Looking like Hex and ICX and Digibyte and Dash. Like, man, it's really tough here. I mean, they're virtually like kind of okay, but just you look at something like Chainlink, and it's like, how can you be that optimistic? Like the way Bitcoin dominance looks, you know, it's right back at the top of the trading range, the Wyckoff accumulation schematic, right? For years now, it's back at it. So look at something like or Link that has fallen below the key level right there from September 2020. Back tested as resistance, working on bearish engulfing candle, just hanging out the 200 moving average. I'm just like really not that impressed and doesn't make me want to go long on it. Yeah, there were rumors, but again, the rumors were false. It came to be not a real rumor. Just like, oh, Tesla acquired more Bitcoin in Q1. No, they didn't. All your rumors are bullcrap. Okay, look at this. This is the level, man. You've tested it, and that is it. Once again, tested it. 48%. So I would imagine if that's the way it looks on here, what does it look like on Ethereum to Bitcoin? Yeah, last point of supply, man. Yeah, coming on down. I think eventually it will conclude at 5.5 million sats. Okay, not much change from yesterday. Let's go to the index funds, man. Good God. All right, man. So you go, like the bearish divergence on the RSI, or almost same highs, right? Lower levels on the RSI. In closing, unfortunately, $2 below the support resistance from May of 2021. So you've technically, with a candle close, broken support. Now, let's get some fall through, see if it's real. But this is that stagnation I was talking about. You just hanging around, just barely doing anything. I wonder what the consequence will be of a actual bearish breakdown below the level. I wonder. Will we get follow through? Going to require some bad numbers, going to require some earning misses, because some of these big stocks, like look at Facebook, just mooning. All right, Dow Jones, we're just starting to believe, just every day that goes by, starting to believe more and more that we are looking at a potential 3 falling peaks classic distribution pattern. This is all of it together is one high, and this would be the other high. So 1 and 2, a confirmation of distribution. Confirmation, there are less market participants in August, December, January, and April. All these times, right, than there was before, which means bear market is certainly very well intact long term. That's just it. That's the way it is. All right, you're getting close to, 33 point... Dude, let's just play it, man. Why not,
32.33 repeating, of course.
You're virtually breaking it. You're at it. You're around it. Just this high back from 2021, low from June 2021, a low from January 2022, a high from June 2022. You're just approaching that, and if you break that, that's where you can start seeing some big downside, because history shows that that's exactly what happens. Upside fast and downside fast. It's where the order book gets thin below 33.22, repeating, of course. And unfortunately, the hidden bearish divergence. So in a long-term downtrend, you're identifying your third peak that is lower than the previous peaks, and it is implied a continuation downward has started to play out pretty well. I just can't break anything. And that's kind of business as usual. That makes sense. Like if Dow Jones continues to roll over, it would make sense. It would. Does anyone have anything to say? Did anyone say anything about what's going on behind me right now? I don't think it's this is what I'm saying. Like doing things, like what's the point? Don't worry about it. Okay, cool. Chat's broken? What are you talking about? No, it's not. Okay, three falling peaks. Dow Jones, classic distribution. Oh my God. Hidden bearish divergence on third high. That's a wombo combo. Yikes. NASDAQ composite. Look. Of course, anytime just a rally can occur. It can just happen, but until it happens, we must discuss the data presented today. And today, what's going on is you broke the inflection point yesterday. Today, because Google or because Microsoft had a good, jump, it pushed this index fund up, gapped up, and what happened intraday? A formal back test of what was once always the resistance support is now formally resistance. And after testing that level as resistance, the buyers relented and the price rolled over and closed, where it did, which is actually up 0.47% today. But forget it being up today. Look what's happening to the level. Look how the price action is correlating to not just, it is a level that cannot be denied. Look left, October of 2020. That's real. You're testing it as resistance. One time, now two. That's just not good. Bearish divergence. So, again, it's not about the breakdown or not even about the back test itself. It's about the fall through after these events. And so tomorrow and the coming days is going to be really important. Let's see if there's actual fall through. Because without fall through, just green candle, illiquid markets, we just break back above it. Okay, cool. But like for now, this is not good. This is not a good thing. This is bearish price action with a bearish variable on a second high. One high, no one knows second high, the confirmation high. These two highs, substantially lower than the high from August, that's certain. It's almost like a right-angled and ascending broadening formation. It's like that on the Qs. It's raining. It's raining. This rain represents the finance sector of the stock market virtually, right? That's what the rain is. And yesterday too. It was 2 days of rain, man. Okay, so not good. This is not a good thing going on in the index funds. We got one more IWM Russell 2000 ETF, and very bad. Very, very bad. This is the lowest daily candle close since March 23rd. Wow, look what happened. Okay, so $173.39. It's not a joke. If you follow the stream, you're in the community, or even if you know how to read inflection points. Look what happened today. You gap down, and then the rally ensued that did what? A back test of what was once a resistance a very long time ago, August of 2018. Guess what it did? Today, not yesterday, today, formally back tested that level as resistance before rolling over and closing near the lows. And you got one last support, and that's right here. That's the 2020 pre-COVID crash high. So I would say certain signs of weakness going on this market right now. This is not what you want to see for trend reversals. This is not it. It's not how it goes. So this is just awful right now. Remain cautious, is what I'm going to tell you. It's been like that, though, right? Yeah. Last week, things like the rally was starting to stall out on a lot of assets. It's like, okay, this is not the way things are supposed to look. It looks more like, stagnation and complacency. So that's like tail end of bear market rally stuff. And I think you are ending the bear market rally on a lot of assets. I mean, like if you look at like those hotels that like were showing through rise and valley is looking good. Classic accumulation and rallying, but just churning upward, selling off again. And I'm going to show you, like, just this one was so interesting looking, a couple months ago. And now it's like, I think it's done. I think Hilton's done. And here's the argument on why. Well, first off, you ran up, made a very decent retrace, a very moderate to deep retrace above a 618. I mean, you almost made a 78% retrace on Hilton. This was the buying climax. This is the massive drawdown. This ushers in the trend reversal, okay? And this is the type of rally we've had for the greater part of, wow, like how many months, how many days now? Almost 300-day bear market rally where it's like a rising wedge. You had the upthrust and then like distribution and then a sell-off. Testing the demand line. Okay, there's demand here and a rally ensued again. And now you're just formally back testing the level that was resistance. It's resistance again. It's like upthrust, back test of upthrust. And you had a 3.4% down day today. And you just think like, yeah, dude, it's like, oh, wow, nice classic accumulation. It's very changed, just like Hilton. Right? During this time, we've only been making higher. Sorry, I don't know, my internet went out or something like that. Sorry about that. So, as I was saying, it's the same type of structure, really, right? Where it's kind of like, maybe it's a little different. Maybe it's just like a channel. But again, like, oh, it's like a bear flag or something, right? You do it like that. If you start including everything, what makes the most sense here, it still looks like upsloping price contraction, 1 and 2 and 3 and 4 here. And the biggest problem on Marriott is, look at this high, this inflection point from 2021 and 2022. You have failed to break that and down almost 5% today. Now you got earnings come. Earnings are gonna just it's gonna pump, man. It's gonna dump. Earnings season sucks. It really does, because what's going on? Just the dumbest crap, the inverse of everything. So I can't wait till all these earnings are over with, so we can just stop having to worry about just one day a stupid candle happens. It does just look bad. It doesn't really look good right now. So again, just like all this time we've had this bear market rally going on. This is just not like bull market price action. It's just not. You put in a lower high, right? You had the high from February. Now you got a lower high. Here, well, that's your first one since the bottom that short-term bottom got put in. So anyway, look at the index funds. So let's look at FRC. Halted again, 9-ish times. Okay, down 30% today, down 3% after hours. Oh my God, it's still going down. All right, fell to an all-time low of $4.84. But sir, a couple of days ago it was at $16. Yeah, this is the. I just can't even believe it, man. Like the Gensler and all these losers in the government trying to talk like somehow crypto's like risky and they have to protect us from, and look at stuff like this. And this is like just one. There's so many countless assets on the stock market that do stuff like this all the time, that had done it last year. I mean, how many assets lost 88 to 99+% of their value from the top? Many, like most of them. But we're here to help. We're the government. We're going to regulate and destroy things. Okay, we don't create anything. We only destroy. We only take. No accountability either. Like someone in the government screws up, there's no accountability. They don't get fired. So I'm just saying, like, Gensler, you're an effing loser, dude. And this chart right here proves it. Okay, you do nothing. Like these people are useless. Just tax dollars. Just take our tax dollars. Okay, whatever. And don't do crap. And that's just one, right? I mean, there the banks today, a mixed bag. Definitely nothing like yesterday, and a lot, in fact, actually rallied a decent amount, the bigger ones. But you still look at like Wells Fargo, someone just mentioned. Look at this thing. I mean, it had already broke its rising wedge, right? Look at that. I mean, an ascending broadening wedge with a partial rise. And then now the rising wedge. You were in a downtrend and you're presenting bearish patterns. And look at this. What's happening on Wells Fargo? Yeah, that's hidden bearish divergence out the
Can
yin
you have
yang.
a look at TD on the TSX?
What's up, Jabal? Yeah, dude. What's up, man? Thanks. We'll look at TD. Yep. You don't want to look on the New York Stock Exchange. I have it on my watch list. We can do that, though. Can do it, man. So a lot of downside here. Right, measure move, I believe, was already hit. Nah, maybe not. You're going. I mean, $37 is the target again. Yeah, that's a big one. And if you ever break $37, that's where you could certainly see $23 eventually. So, and that would make all the sense in the world. You got to understand, like, these assets, these are not value areas. There is nothing to do here. This is a good old fashioned M shape in the making. You know it. So even if it doesn't happen, then I'll never own Wells Fargo ever. But if you were looking to strategize something that might make sense one day, you would wait. You would wait until Wells Fargo loses another, my God, 36% of its value before you even thought about anything. And it is completely hands off until then, unless you're bearish. If you're bearish, my God, there's an edge being presented right now for a continuation downward. And once $37 break, it's over, dude, way lower. And that's what you're waiting for. You're just going to be looking for a full reset here on these banks. What's the reason why you wouldn't wait, man? This is not value. There's no value here. Like, what does it retrace so far? 61.8% of the way. Well, look, it's 618s. What happens on the initial drawdown? The 618s are great areas for reactions, right? For like the first time the 618 gets achieved, what you'll see is consolidation phase begins. And that's exactly what happened on Wells Fargo when it hit the 618. It was confluent with support in June of last year. And then what happened? A rising wedge pattern, undeniable, occurred. And now you've broken it and you'll soon be coming back. You've already tested it again, right? So you think, oh, is it the second time? It's like, if you see it one more time, you're breaking it, man. You're going to break this thing. So one does not simply test an inflection point in 618 twice, have a rally, and that's it. And the rally, the market participants were so weak, they couldn't even push the price to test, first off, 43.57, an inflection point, but also the 200-day moving average. So bearish, man. Screw Wells Fargo. So bad. I mean, it looks great for lower prices, though. That it definitely does. Yikes. And here's the thing about it. You can't even, question, are we sure we're in a long-term downtrend? Look left. Look what was happening before all this. This was just a loser bear market rally from the COVID crash low to the mania high in February 2022. That's all that was. Because you're still just making lower highs than the previous highs. Long-term downtrend, man. So eventually the retest of the old levels in November 2020. Okay. I would not be surprised. Anyway, it's fun talking about stuff like that because it's trend analysis and trend discussion. Things can be educational to reinforce those, I don't know, the values, whatever, okay, of reading charts. Citigroup, it's terrible. I mean, it's absolutely terrible, dude. It's been in this long-term downtrend. Who cares if it kind of maybe broke out of a channel, that it was confined in? What if we adjust now? If we adjust, is perfect, right? If you take, I'm saying adjust for the new data from February last year, just to confine all the candles within, look what happens. You can see one test, two tests, and now those are up thrust, and this is the back test of the up thrust on the lower high, and about 50. Look at $50. This is level. You go back to, dude, this is so real of a level. Look, I mean, 2010 and 2011, market participants pushed the price recently after they failed to break that level, right? After putting in a lower high than the previous high. They failed to break that level. The sell-off occurred, and then a scrub rally began. And what was once a resistance in 2010 and 2011 is now resistance again. That is a form of confirmation that it tops in. You could extend this out now, maybe. Try to confine it all. I'm not really that concerned with it. But people are like, oh, head and shoulders? Sure, if you want to say head and shoulders, whatever. It's kind of in a weird spot, left shoulder, head, right shoulder. But the momentum is, with the lower high and the formal back test of the inflection point, the momentum's is being retaken by the bears, by the sellers. That's what a lower high represents, like this, okay? And yeah, you do have hidden bearish divergence on the daily on Citigroup. I mean, these banks are freaking nasty, but they're beautiful too. They're beautiful because the trend is your friend. They're showing a bearish edge. They're doing formal bearish back test. That's awesome because that's like the stuff we read to protect our capital or to make some money. Okay. Do you want to continue with the banks? I don't know. We go to gold. It didn't really do anything today. I'm just looking at the sector that's getting wrecked. I mean, here's a great educational chart right here. JP Morgan Chase, man, and company, and probably FRC or whoever one day. I mean, because they've already been nationalized and they're going to acquire other banks now, I guess. So look, dude, I mean, undeniable bear trend, bear market rally, ends with disgusting bearish divergence. Bearish divergence, buyer exhaustion on a reflexive rally like that at an inflection point, right? I mean, going back January 2020, an up thrust, a sell-off, a pivot, and then an attempt to break it, and just a formal bearish back test. What was once resistance is resistance again, called out the up thrust and the back test, right, of the up thrust. And what happened, that's one of your strongest technical indicators known to man on a chart. That combination right there normally has insane consequence, which is way lower, or at least this gap fill at 129 here. So to me, I would think it would take out the low from March 30th. We'd be seeing 118 and possibly even 91 in months' time. So yeah, man, just bear market on these banks. Guess I could go all day, man. Maybe we switch it up, I guess. You're just like, I don't really care about banks, which you should. You're crazy, man, to not care about banks. Right now, I'm talking about the price action, what's developing.
On LSE, please. Indicator only showing good things on monthly. Thoughts? Hope you're well.
What's up, G-Dog? Yeah, I'm well. Hope you're doing well as well. Well. Thank you. Yep. BT8. Want to talk to you about. All right. Yep. And if you could even believe it, hidden bearish divergence on the lower high. Good. It's just awful. Who cares if it rallies? It is just screaming lower prices, but whatever. Okay, so another massive loser today was In-Phase Energy earnings, right? But like this thing, we were looking at this up here, right? You're hitting a supply line on an attempted rally, a slightly higher high with disgusting bearish divergence in the daily and the weekly and 3-day. And I pinged all patrons back in early December. This is a great area for a low risk short. And since then, I think it's lost 50% of its value. Yeah, 50% of its value gone since there was a discernible edge at an inflection point on a second high. That's what dreams are made of.
Hi, Mitch,
just like if it was the other way around.
BTC.
What's up, Remix? Yeah, we'll look at that. Thank you, dude. Just like if it was like this, where an asset was hitting a demand line for the second time, slightly lower low with bullish divergence, that's exactly where it could be a low risk long. But yeah, it's just the chicken's coming home to roost now. I mean, your target is down here at 118. See the bottom of this mega right angled and ascending broadening formation. This is colossal sized. Wow. Yeah, Activision, the deal fell through. UK regulators just said, hey man, look, you're not going to be able to be acquired by what? Microsoft. So just a gap up. I think maybe on that news, I can't remember what the news was, and now a gap down. This is a pretty freaking cool example. Could someone tell me what this is? What Japanese candlestick pattern this is? This is incredible. They're rare. They're very rare. You seldom see stuff like this, but here it is. I'd like to know if you know. See if anyone's awake here. I never talked about this on stream, ever.
Can you look at PXD? Potential free falling peaks?
What's up, Rethink Finance? Yeah, dude, thanks for the 25. We will look at that, okay? Kingsman. Bad, so needs his glasses. Get your glasses, dude. I got mine on. You have no excuses, man. I guess a lot of people don't know what this is. So this is a more complex version of an abandoned baby reversal. This is just called, someone got it right. I mean, Chuck E. Savage was correct. The island reversal, you call this the island top reversal, where you gap up, a lot of candles are presented, like just like this, just close together, and then one day a massive gap down to match the gap up. That's an island top reversal. Just again, it is a complex version of the abandoned baby. Beautiful, very rare. You seldom see it, and I guess it takes catalyst earnings, whatever. And that was good enough catalyst. Lowest daily candle close on Activision Blizzard since early March, so not really a big deal. Still above $75 here. $75 is a pretty big deal. I don't think you want to see Activision fall below that. Excuse me. So, unfortunately, since it topped out, it went on its rally, a lot of gaps up, only lower highs, lower lows, and now a lower high. I don't even know. I mean, would you even consider that a higher high? I'd say about the same high as the high you saw. There's a lot of gaps here, man. It's crazy. This is a psycho chart now. It didn't used to be like this, man. All these freaking gaps. Gaps down, gaps up, and gaps down, man. All over the place. So I guess 74.72 is the big one. I mean, yeah, 79.30 was also real too. But look, it's just like a high. The price action's correlated pretty well there. So I think 74.72 is a big one. You don't want to see Activision fall below. Oversold for the first time since October. Yikes, man. Below the 200-day moving average with a close. All right. That was a big deal. Let's look at SEDG. That, in my opinion, man, it looks wonderful for lower prices. I mean, maybe it doesn't. And earnings, of course, earnings coming up, man, gonna just destroy it. The idea I have here is just gonna get destroyed by just a stupid Rudy Poo bull crap, illiquid pump. Okay, but just again, without earnings, this looks beautiful for just like thinking about. Okay, it's like a triple top. Yeah, it's like a triple top. Same highs, and then one last high, the lower high, and below the key 312. And gapping down today, down 10+%, falling below the 200-day moving average with a neckline, pretty discernible here. I would just go horizontal. Right there's your neckline. Okay, and so what would a measured move do? It wouldn't be anything crazy. It wouldn't make or break the bank, but $201. I mean, shoot, dude, that's pretty bad, right? We'll measure move here. Not a very big pattern. And again, earnings probably going to destroy it. But look, I mean, that's kind of line TA Tetris, the support, measure move. Okay, you can't be that surprised that this occurs. But again, earnings, all bets are off. Take it to the casino, man, because any type of beautiful, well-developed pattern can get just slaughtered. Just, it's up 20% on some bull crap about, we came out with some new technology for solar crap. Okay, great, man. Greta Thunberg and Klaus Schwab pumped their money into it or something, right? So just, that's earnings, man. You have to have that mentality. It's bull crap. Nothing makes sense at all, ever. So, but it was one of your worst losers today. I mean, solar power in general getting wrecked. Look at this thing, man. Look at SPWR, SunPower. I mean, it's already broken the big support. So you're in markdown territory where, look, you think no stopping SunPower until it probably gets to 768. I mean, the divergence was here, and this is like fatal stuff, man. It's not good. Like when I'm showing divergence and it just doesn't even play out. I mean, and look what happened a few days ago, 1485, which is a support. I mean, look at this. This is just, it's so real. It's just such not a joke area, right? Resistance is here and supports here 2005, 2011, 2015. That's been formally back tested as resistance now. And $16, the one before it, it's already been back tested in March. So very bearish price action, beautiful correlation of price action to inflection points. And so, yeah, there could be a lot more downside on solar here. Okay. Tesla, look at this one, just sitting at the support. Death and doom upon ye. Same type of upthrust, back test of upthrust that we're seeing right now on JP Morgan Chase, right? The reflexive bear market rally, the upthrust, the failed break of a key inflection point from history, and then the sell-off, and then the attempted rally. The attempted rally turned into the formal upthrust back test, which is a strong technical indicator, and now the follow-through, supply line broken. It's a bearish dragon pattern. And if market participants cannot hold this one last line of defense, a lot lower to go. I mean, a gap fill, it's already been filled, but that could be the next target, 136, but you're thinking 111, 112 again. The trend is your friend. You're below the 200-day moving average. There is nothing bullish about Tesla at all. Long-term bearish trend, please don't get confused here. Anyone trying to identify bullish patterns in these type of market conditions, you are in the ocean. There is an undertow, and you are trying to swim against the undertow. Look for the bearish stuff, the bearish thing happening, right? This is a bearish technical indicator. Okay, anyway. There are many assets out there, okay? Many assets that exist. So many charts, so little time. Maybe let's just switch to gold here. I'm just looking at some of the assets.
While I enjoy this long neck, can we look at its stock dollar bud?
So, Mr. Lodick, yeah, dude, we'll look at Bud. Anheuser-Busch. Used to be American, and then it got sold, and it's not American anymore, hence what it is now. So yeah, here's gold. Thank you, man. At the 88% retrace, not much of any sort of reaction. So where are the bears? Where are the when asks? The asks are not coming in yet on gold, which is good. I don't know how they really could. It would be bullcrap manipulation, since we know central banks are acquiring record amounts of gold all over the world. So it's just like, with knowing that, I just don't know. Like, it would all be a fake out. It'd be bullcrap. It'd be a chance to accumulate at a slightly lower price. But for now, no reaction at, you know, these patterns, how beautiful they are. They usher in massive cycle reversals, huge trend reversals. But I mean, nothing's happening right now. Not yet. Crazy. You are pausing, as Scott Carney would say. It's the pause. And so, like, you know, pattern completion zones of harmonics, if in stupid conditions, can just act as the area where the asset pauses, high and tight bull flags, and then gone again. Just more markups. And then think about it. You can go to 113, which is all-time highs. Sure. Silver just hanging out above, you know, just right above this 2484 level from history. Again, I don't even care about the daily. You just look at, you know, who cares? Any pullback's just a chance to buy more, because the monthly tells you probably $30 and $40 next. Yeah. It could take 6 months to 2 years, but that's why I'm saying, like, one could buy physical gold and silver and platinum and probably be in really good shape in the coming year or two. And speaking of platinum, let us remember, like, just a reiteration, just in case you're not seeing things. Platinum has broken out. Platinum is on the monthly showing an insane, really insane inverse head and shoulders. The monthly. This is all you need to care about. Same with gold and silver. I'm trading the monthly on gold, silver, and platinum. Platinum it seems like platinum probably has the most upside potential, because, right, gold's at all-time highs, near all-time highs. It's at an 88% retrace even locally. Silver's been on a nice run too. Platinum, right, though, is been really quiet, subtle. Composite man is maybe behind on his accumulation campaign. So above 1,050, oh yeah. Above 1,050 is green light, right? Above 1,050, yeah, there could be a lot of downside. It could have been a fake out, but this is the monthly. Again, that will be closing in 1 day, 22 hours. So in 1 day and 22 hours, you will have a formal bullish breakout on platinum of a key inflection point from 2006, not to be ignored. Next month, we get back test that. And if it holds, oh my God, 1337 and then beyond. So, oh yeah. Gold to silver. I haven't looked at this in a while. Ooh, gold to silver. Very interesting chart, right? At critical areas. Kind of a local lower high here. It's the monthly. Go to the weekly. That's a lower high, man. Below the 200-day moving average, 200-week moving average. But not a lower low yet. But hidden bearish divergence. Gold to silver. Man. This is a tough one, man. This is really tough. So this is like trying to determine, you know, it's like Bitcoin to Ethereum. Trying to determine what's going to outperform next. And this is gold to silver. So gold to silver has put in a lower high in the previous high. It's like distribution. So does that mean down next? Really tough to say. This is not an easy chart. And I'd say you might have a bearish dragon or something, right? Anchoring like this, and that's your demand line. If you ever break that, could complete a massive M shape or something. But for now, it's okay. I mean, silver. You break $85, that's where silver goes nuts. I mean, that's where silver outperforms gold. Okay, so, you know, in the world of commodities, man, seafood futures, seafood this is it, man. This is the life. This is the dream. This is the TA. I mean, remember that time there was a formal spring and a back test of spring, and you can't argue because it happened. This is what identifying this stuff can do. This is like what this is what some of these assets are doing the other side, like flipping the chart over. They're doing this bearishly. Tesla, JP Morgan. Okay. So anyway, the second low, it's a dragon, and you just had your highest daily candle close on seafood, the seafood chart, Greg seafood, since February 1st, approaching that 200-day moving average, and you even back tested this 83.90 level. 83.90 is an old all-time high from 2017. You broke it, you back tested it, now you're going. So, and now we have this next breakout point, which is the high from February. Breaking that, man, you go to $100, you break $100, wow, going for a full 886 maybe. Okay. Hog futures, dude, this is an insane chart. Not like, this is crazy, right? Is this not psycho behavior? I mean, are we type 2ing here? 1 and 2, you gapped up, and on the gap up, you've pulled back and done what? You're back testing an old resistance from history. It's now support. And what if this holds? This could be the bottom. We'll see. Just keep your eye on it. This is crazy, crazy chart. Lean hog futures. Wow. Okay, man. Coffee, futures just been climbing methodically. Okay, it was just up 1.7%. Here's your stakes. You finally gapped down, man. Wow, just about effing time, dude. It only took forever. It only took going to all-time highs. There was no edge, of course not. No, it was technically bullish convergence. You made a high, then you made a higher high in price with higher levels on the RSI. That's why, and the MACD. There was no edge. It was just slightly all-time highs. Okay, but today kind of engulfed yesterday's candle. All right, so let's get these requests, man. Hey, guess what, dude? 8 minutes till your close and legit nothing. Really kind of unfortunate on the 4-hour on Bitcoin. I mean, the bearish engulfing candle to fall back below 28,800, and then the rally on this 4-hour candle that will be concluded in 7 minutes. You've back tested 28.8, 28.7, and no higher. So it's almost like up thrust back test of up thrust real fast. Okay, first request was TD on the Toronto Stock Exchange. Toronto Dominion Bank Connect. Oh yeah, man. Oh yeah, this is trouble brewing, dude. This looks so effing bearish, man. So bearish. I don't even, oh God. What do you even say about this, man? Like, Quasimodo looking head and shoulders, whatever. Okay, you don't even have to go there. You just got to understand what's happening, right? Oh, nice 3 falling peaks, classic distribution for rolling over, then a bear market rally. Bear market rallies concluded. These 2 highs here from November and February were substantially lower than the previous discernible high, reconfirming the long-term downtrend's validity. You're below the 200-day moving average. There's hidden bearish divergence going on. And you're at this zone now, and this is an incredible zone of inflection. Like, you just do not want to see the asset fall below this. But based on the price action, based on the context, that's probably coming. Okay, look, all these. I mean, when an asset does what it does, it's like market participants, when they're buying, they're making it. They're testing the market. They're saying, "Hey, I wonder how many people are buying with me." And when you get to a point after months, many months, like 5-6 months, where this is it. One high, then a rally, a slightly higher high, and there's bearish divergence, and then you start rolling over again. Okay, confirmation of distribution. Nope, no more. We're screwed. Reconfirming the bear trend. Nope, I'm done. And so everyone gets out, and then there are limit orders, limit buys, set up algos, whatever, down here, because that's exactly where, there would be limit orders, right? It's an inflection point. And so a small scrub loser rally occurs off of those limit buys. Okay, they're defending the price for now, but what's the context after the defense? Substantially lower market participants involved than before, than even February. So that will eventually, the demand at this level will evaporate, and there will be another massive markdown, probably to 65.81, the low from 2018, the VIX crush. So that's just the way I'm looking at it. This is the way, I mean, a lot of assets out there, including tech stocks, look like this. They just haven't done the massive drawdown yet. Okay? Hilton and Marriott, early in the stream, we looked at them. Similar price action. Wells Fargo, very similar price action. Okay. Whew. Was that okay? Did that work? Dude, I mean, these charts are not just, I'm just looking at stuff, man. Green and red. No, it's like actual people trying to figure out, like everyone together, the whole market together trying to determine things, and like peaks and valleys represent certain things. And that's what all I'm trying to do is teach that. Okay. So forget, head and shoulders. I don't even need that. Look from this high here to the low. That's a 786, nearly an 88% retrace. That is a value perceived area for a shorter, someone to go short or buy puts in a bear market. Yep, 886 is the dream spot. Trying to tell me one time and the second time. Yep. Okay. Well, that was for Jabal. Thank you for the 15. G-Dog, let's go to the BT.A. The BT group. What is this, like the Beatles or something, dude? Is this the next new hot rock band out of London, Matt? Major telecommunications. Okay, well, yeah, we had this identified Gartley bat combo, right? The 618 on B and the 886 on D. A wonderful reaction so far, getting back above 140, which is an inflection point from history. Yep, big level.
Please check DQ on NYSE.
Look at this level, man.
Thanks
2003.
for your tenacious teachings.
What's up, Bilal? Thanks to the 15. You look at Dairy Queen? Oh. Nah, not Dairy Queen. Dairy Queen. Are they owned by like Yum or something like that? So, I mean, it's cool. Above 140 is incredible. But we're always looking for those confirmation lows, right? But here's the thing. This M shape, go the weekly. This harmonic in itself is the type 2, really, right? Isn't, or could be considered that? It's so visible. It's crazy. And trying to break that 200-week simple moving average. We got a golden cross? No way. Wow, we already had one and just no price action. So you put in a higher low, right? Your first higher low in like, whatever, 7-8 years. That's insane, right? Your first higher low. And so what do you do here? Do you set a stop loss slightly below 140, 141? Because I don't think you might not want to own it below that because that's the area you're strategizing. Or do you let it fall below that and wait for a type 2 of this small harmonic? But the issue with that is always you put in, this is type 1 of the big harmonic, and this would be type 2. That's the problem when you're identifying double harmonics here. It's so pretty. At least you're at a lower risk area. That's for certain. Okay, you're at an area where we got something to work with here, where we could try to strategize it with the inflection point or the low from November. Because the upside's crazy, isn't it? Straight down, up, down, up, down. I mean, that's it. So if you stay above 140 long enough, you could get the same conclusion of up 337. So there you go, man. Pretty good chart. Yeah. Nice. DQ is not Dairy Queen. It's a Chinese energy company. All right. XTP to BTC for remixed. Oh, God. Oh, my God. Thought we were friends, man. Thought we were friends. Okay, well, I appreciate the contribution. I'm very grateful. 100% crowdsourced. No affiliate marketing links. No sponsorships. No advertisements. Copyright music for you. So I do appreciate this contribution, and this is what he requested. There's nothing to look at. There's nothing here, right? Look at all the stuff we were looking at today. All the bearish back tests, Tesla, JP Morgan, man, all the stuff. We just looked at one, like, that was good, maybe. And then we look at this, and it's like, there is nothing to do here. It's a loser. It's a scam. I mean, like, tap to Bitcoin it's a scam, dude. Like, some guy, right? 99% of these cryptos that exist on this planet, they were created because, someone got rich creating a crypto. I'm going to do it too. And they'll come up with some reason on why it's not a scam. Like, oh yeah, man, this one will cure cancer. This one will do this. Yeah, you'll be able to like use logistics with AI to do AI. Like whatever. So I mean, what do you want me to do? This isn't even chartable, really. This is a joke. I'd never trade this. I would never analyze it. I'm just looking at it. Great, dude. It pumped and it sold off 60%. We got a new day. Time flies. Been live for an hour. Sorry, dude. I mean, it's XTP. What do you expect? It's tap to Bitcoin. Tap. I'm sure the developers are so smart, man, and they're going to change the world like all 99% of all the other crypto scams. Beanie Babies, man. This is like an off-brand Beanie Baby, dude. This is like, remember when you were a kid and you would get Beanie Babies and you liked them, and then like, a family member would bring you some generic non-tie stuffed animal that was like a Beanie Baby? That's this. I don't even care. Okay, show me Princess Diana and Claw and all the and righty and lefty, and then you got this. I don't want this. Grandma, send this back. Give me credit at Little Gatlinburg so I can get an actual real Beanie Baby, like Monero or something. At least Monero is pure privacy, or whatever. Bad example. Cardano, that's a real Beanie Baby. Okay, we gotta move on, man. I'm sorry. I remix. I do appreciate the contribution. Okay. Pioneer Natural Resources Company. Ooh, yeah, man. So it's been in this long-term uptrend, but been kind of unable to do anything since 2013. Yikes, man. And then, like, on the daily, there was a disgusting head and shoulders. Yeah, I have concerns here, man. This is gorgeous. I love identifying bearish reversal patterns at inflection points. Okay, it just increases the reliability of them. It is the lowest risk, where you're able to strategize a tight stop in case the trade fails and goes against you. And look at the drawdown since that, like, it's the Terra Luna fractal. How many effing times do we have to see it? Where an asset will make a high, sell off bad, and then make a slightly higher high with the head and shoulders on the second high. Terra Luna fractal, natural gas. Wow. Okay, so anyway, the trend has reversed. You are not in an uptrend. You are in a long-term downtrend. We know this based on the price action. Since the buying climax in June of 2022, the massive drawdown that began it all, the lower highs than the highest high, and then eventually a lower low than the previous lows. That pretty much confirmed the downtrend when this level broke back in February, March. And so now what's happened, this is a little bear market rally, a reflexive rally, a pretty nice retrace from the previous high to low, testing the 200-day moving average as resistance. And of course, in your downtrend, after a really nice reflexive rally with gaps unfilled that are gonna fill, man, hidden bearish divergence. It is implied, no matter which high you use, all of them. A bearish continuation is implied in a downtrend. Okay, so we're identifying a bearish variable in a bearish trend. Therefore, it's going to have more liability. So to me, bearish. But hey, man, whatever. Is earnings coming up? Earnings going to just do whatever. Now, it already reported, didn't it? April, it reported today. What did it do? Did it moon? Is it up? This is what I'm saying, man. Like, okay, the whole argument I just presented could be destroyed after hours, right? It could be just It could be at 260 right now because of bullcrap. It's an oil and gas production company, and some of these energy companies are done, dude. They already put their tops in, and they done. Yeah, so let's see here. Let me just try something. I'm sure, man. It's probably it's up, man. No, it's down 2.5% after hours. Okay, there you go. So it's down. Okay, this is a bear trend. Earnings did not go well, and the trend is your friend if you're bear. Okay. Next request was Anheuser-Busch, which you'd be surprised what his chart's doing compared to what's happening in the world. But this looks like it's going to end not so well. I don't think a rally like this is going to sustain. And when those numbers finally start coming out, which they haven't, I think you will finally see some consequence of that. So you're in a long-term downtrend until you start taking out your previous highs, one at $79, $72.79.
Hope all is well. Can you help with a 24-hour estimated price target for Ethereum? Thank you, sir.
Well, Crons, I don't really work on that. I don't really work with like, hey, man, in one day, the price will be here. That's just, it's not like how it works. Traditional technical analysis isn't fortune telling, and it certainly isn't very reliable for like a one-day prediction. I don't even predict things, man. I just tell you what's on the chart, the psychology of buyers and sellers, and sometimes it even fails, So this chart here, man, certainly a long-term downtrend. It's been in one, probably remain in one, and the trend isn't even like in jeopardy of reversing until you take out $80. Probably, yeah, no, there was an M shape, man, an M shape. Didn't even see the 786. So, yeah, you're above 64.75. That's the big one, man. Like, if, say, like in the coming days or like week or two, Bud or Anheuser-Busch falls below 64.75, that might be a legendary short. Legendary short. There is daily bearish divergence on the RSI. They both got oversold or overbought. Okay, so I don't, they already had earnings. Okay, whatever. I would not trust this at all. But you're at like this from this high from January to the low. You're at a 98% retrace, a gap filled, a very subtle, and that could be what happened. That could be what was going on with the asset. The market participants wanted to just fill the gap, maybe, and that's it. Remember, about 20% of the time, 22% of the time, gap fills act as resistance, and that certainly was the case. April 5th, 3rd through the 5th, whatever. I mean, it's like 4 days in a row. So that could be what happened. And now there are unfilled gaps below you. Buyers are exhausted here, and long-term downtrend. I would not trust this at all. And once the asset falls below 64.75, that might be the trigger to go short. Okay, but you're above it right now. I'm just telling you what's happening. Okay. Let me check my notes here. Checking my notes, man. Not really. Just looking for a new music set. I don't know. The stream's probably not going to last too much longer. But hey, man, this is a good stream today, I think. I mean, I think, when you improv, sometimes you do a good job. Sometimes it's not as good. And it's like, I think today, like letting it flow, letting the brain just go. Looking at some of these charts and looking at the price action correlation to levels, I think there was a lot of ground covered and possibly some value instilled in the lives of others. So let's go, dude. Okay. But I wouldn't trust it at all.
Gentlemen in the mix.
Good luck, though. Maybe it moons. Okay, cool. I just don't think the free market's going to... That's not the way it's going to go. Anyway, let's go to Dairy Queen. Cap up. Going to DACO New Energy Corporation, DQ here. Oh my, so bearish, man. So bearish. You're like in the middle of the bubble popping. You're in the middle of a full reset. Well, this is like the target's 1431. It might take 6 months or a year, but I think that's where you're headed. Look at this. This is so bearish. One just goes short. One just goes short. This reminds me of last year on so many assets. Okay, forget the, it's a head and shoulders. Just forget it. Just think about it like this. Right? Oh my God, it's so many things. It's so bearish. It's beautiful. Right? We've been talking about trends. What's the lowest risk area for a short in a downtrend? A rally that extends to the 88% retrace.
Can you take a look at CTOS on daily and weekly? Thanks for all you do.
What's up, Dairy Queen Blizzard, man? Yeah, we will look at CTAS. Sure. We'll do it, man. Thank you. So, right, the 88% retrace. That type 1, type 2. This is like a bearish shark pattern. Oh, it's beautiful, man. Bearish sharks and bearish trends. This is hindsight a little bit. But it's just like harping on more of what we were talking about earlier. And now after the great performance of the bearish shark, I guess I'll just picture it. I'll just have it pictured for you. So you're like, what is he talking about? Right, that's beautiful. And you had one attempt, and there's bearish divergence up here. It was everything you could have dreamed of for a short. And now you're rolling over again, and here it is, right? You just massive distribution, right? Okay, you hit like near the targets for traders, right? And the rallies ensued. And when the rallies ensued, when the shorts covered, it was substantially lower highs than the previous high one time. And then you sell off and make a lower low. And then you rally, and it's like, what happened? From this high to this low, what'd you do? Pretty deep retrace. So subtle distribution, slightly less market participants involved than before. And just wait, man. Wait until these levels get tested again, and then they get breached, and then it's over. Your target from here, I think, is $40 or $34. So from where you are on DQ right now, I think you have another 20 to 21% downside, and once that, it's already tested that level, okay? And if it comes down and tested again, it might hold it for a little bit, limit orders, limit buys and stuff, but probably another lower high, and then later it tests again, and then breaks, and then you have a nice mark down to 1431, and then that's when, the full reset happens. This is disgusting. Kind of reminds me of Dogecoin a little bit, but worse, way worse. Whew. Ugly chart, bearish chart. 20% more downside minimum. All right. All right, Kron's wanted a 24-hour estimated price target for Ethereum. Wow, dude. Hardest request of the day because it's impossible. Because it's just not how it works. But I will look at Ethereum for him because he did contribute to the stream. All right. You're in the most coin flippish area you could ever dream of on Ethereum. If you are in the dead middle of two inflection points, that is the last time. That is the last place one's looking to strategize. There's no way to strategize, right? You strategize by looking for the identification of indicators at ice lines, supports, resistances. If you're in between two, then it's a coin flip. It could just as easily go to 1730 as it could 1972 to 2000 again. I really like it making a higher low here. I don't think there's any problems. I don't think you're in trouble until it falls below 1420 technically. But to stay above 1730 or to never even see it again, I think is really bullish. And we have those long-term targets at 2400 to 20 or to 3300 or whatever, 3340. So I think there's more upside in crypto on the big coins, not the small ones, man. There's some dynamic changed. And that was, Gary Gensler, conspiring with a political group to money launder, and then to promote a scam, and then they go to war on crypto after the fact. It's just like the ability to on-ramp liquidity into this market has deteriorated substantially in the past 2 months. So that's a reality we have to understand happened, and it's regulators that did that. And maybe one day it'll change, but for now we can't just ignore that. And so I think the consequence of that will be Bitcoin dominance Wyckoff accumulation will complete. We will break 48% market cap dominance on Bitcoin, and we will eventually run to 60% market cap dominance. So the money that can on-ramp, the liquidity that can on-ramp, it seems like it's going into the bigger cryptos, the larger market caps. So especially Bitcoin itself. Bitcoin seems like the bet right now. Not altcoins. Not even Ethereum, really. Right? Why would Ethereum be your play over Bitcoin when we're staring into the face of undeniable tech? It's served us extremely well, and it's been playing out like an effing book, like a book or a movie. Wyckoff distribution on Ethereum to Bitcoin. That implies that, you know, eventually it will be 5.5 million sats, equaling 1 Ethereum, right? So when you look at this, I don't know how you would want to own Ethereum over Bitcoin. Just saying, man. And then this too. Remember, we looked at this earlier, and it's just don't. The composite operator, he has accumulated his entire position. All right, he spent years doing it too, by the way. So we're now on the signs of strength. The latter phase D, where the last point of phase D. Once you officially break 48.7, you'll be in phase E, and phase E is the markup phase where you head on up to 60% plus. And of course, Ethereum's going to go up too. All the altcoins will go too with Bitcoin, but Bitcoin will run circles over them in performance. Yeah. With the whole banking thing going on, I mean, like, putting your money in a proof of stake like Ethereum, that doesn't really make fundamental sense. It's like, but proof of work, Bitcoin, decentralized. There is no Vitalik Buterin, right? No one can come after the Bitcoin CEO, man, or the developer, right? So I think, like, fundamentally, Bitcoin, like this right here, it's like, show me the charts, I'll show you the news. Well, this is certainly one where we're looking at the chart, and we've been looking at this chart for a long time, and it's been playing out perfectly. It's like, show me the charts, I'll show you the news, where Bitcoin continues its ascent and adoption all over the world and performs better than the altcoins. And we just talked about why Bitcoin will outperform altcoins for a long period of time. And that's because the on-ramps for liquidity have been destroyed by a very, very, one of the most authoritative, you know, administrations we've ever seen. Like, it's never been this bad. So that's where we are, man. That's where we are. Bitcoin heading on up to test 28,800 again right now, up 1% on the new day, $300. Let's go. Yesterday was just a bad dream, chat. We got a new day, new opportunity to be kings. Here we are. Look at this. Bitcoin's rallying up. It's trying to break 28.8. You know what 28.8 is. You know it. It is undeniable. It's right here. It's been written in stone for eons in crypto. And breaking that, a quick ride up to 30K again. Maybe it's real this time. Again, this was a rumor catalyst. And then when the catalyst was found to be false, a 5% swing in price and actually a higher candle close than yesterday, which confirms a bullish engulfing candle, right? The follow through of the bullish engulfing, you always want the next candle to close higher. It did. And so now just butting up against key inflection points, like, maybe since that rumor was false, let's just head on back up to the level after liquidating everyone, bears and bulls. Things at 300 likes. Wow, dude, just dead streamer. Dead streamer streaming, man. I don't know what to do anymore. Like, let's go to CTAS. CentOS. Oh, yeah, man. Oh, God. Oh, yeah. beautiful. Beautifully like bearish, like lower risk for, yeah, this is like a bearish shark. Type 2 bearish shark at 113. That's close to 113, right? I mean, like, look, think about it. And it's too deep on B. That's not a real shark, but it's like, we don't have to think about, we know it's like an XABCD, but dude, this is beautiful. And like, dang, man, I wish I had CTAS, Centos, you know, they do like mats and commercial like chemicals and all that for restaurants, hospitality. I wish I had this on my watch list because this would have been an epic short. You have crazy bearish divergence in the RSI and the second attempt to break out, and it failed. And now you're rolling over earnings. You already had earnings, so you're safe. You gapped up on earnings too. You knew that gap was going to fill. And so you're just getting wrecked. And like 369 target, if it's going to, you know, if these levels don't hold April and August 2022, then you have a target 369. So I mean, the trend is unbelievable, right? It's crazy uptrend. So it's hard, like one short, but this low risk, I mean, doesn't matter what asset it is. This is a high from December 2021, and you just double topped here. So again, 369 would be your hard target if this is actually going to play out. We could like play it like that. And some sort of like, oh my God, man, like it's like a rising wedge, man. Look at the weekly here. What does it look like? Probably looks insane. Upsloping price contraction. Old channel there. Oh my God. Look at the, oh wow. Look at the weekly MACD histogram. This is like insane bearish divergence, right? So it is implied reversal at a key inflection point. Second failed test. Yeah, man, you gotta wonder here, right? I mean, hey, you break 461 again, the entire argument is pretty much invalidated. I mean, but the thing is, it could run all the way up to $500, $495, hit the top of this wedge, and then roll over later. Nevertheless, nice request, man. The very, very nice request, DQ Blizzard. Thanks for the 20, dude, okay? All right. Let's go Bitcoin. 29K, chat. Let's go, man. All right. Yesterday was crazy, but up 2.11% already on the new day. Look at total.
I like turtles.
Yeah, man. Me too. But still, you know, so much adversity, so many levels have to be breached, man. Same with Bitcoin, dude. It's like you're trying to break one. There's like two more, 30. It's like, unfortunately, 29K, 30K, 31K are all potential inflection points. That's just the way it is on the Bitcoin chart. It's just history. And so any level could act as a reversal. And it happened that way, didn't it? Like 28.8 and March 22nd and many other times. And then March 30th. And then look, even April 5th. But it finally broke. And then you ran to the next level of resistance, and it was 31K, and that's where it reversed. But now it's pivoting and round breaking 28.8, and so headed to the next two potential inflection points. Hopefully, just break it in Moon. Fundamentally, Bitcoin has never been more bullish, ever. Not even close, man. I guess the last time Bitcoin was this fundamentally bullish was when it was created in 2008. Because what was happening, the governments, Federal Reserve, and the banks together destroyed the financial system as we know it. Banks were nationalized. Government gained more control. Money printing started devaluing your buying power, right? So, and when they do that, man, that's a tax. And that means like all the work you put in, your job, the hours you put in, it is not worth as much anymore. You have to look at it like that. Not just, oh, my money is less, worth less. No, it's the hours you work, the things you do at your job are now worth less. So Bitcoin is the answer to all that. It's like a financial religion. And it's like, you can't trust in anything else in this world besides Bitcoin, because it's backed by mathematics. It's decentralized, individual sovereignty, man. Finite supply, deflationary in nature because Bitcoin gets lost. And you can take your crypto with you anywhere. You can transact anywhere. Unlike gold and silver and metals, those are great stores of value, man. They're terrible for medium of exchange. And I think this is only going to get better, like for Bitcoin. The argument only gets stronger for Bitcoin every single effing day we wake up. Okay, so Bill of Rights, Constitution, and Jesus all together, man. Great combination. Okay, so 30K target here, above 28.8, 30K no matter what. Like yesterday we were starting to, hey, why not 30K? It doesn't make sense. It pretty much went there. It did. It went to 30,050 or something, right? So very nice on the new day. Up 3% now, chat. Very nice. How's that Bitcoin dominance doing, right? Is it going up?
You have to make a hip-hop album. Who you featuring?
Oh my God. Bitcoin dominance at highest price, highest level, highest percentage dominance since April 13th. Okay, this is strong as F, man. Hip-hop album. Who am I featuring? I don't know, man. Maybe like maybe Logic. Who's the other guy? Can't remember his name. I like him though a lot because he's like real. Oh, Pete Flux. Well, Pete Flux.
You are a Q-cation warrior. We rarely look our BTC longs. Once you said that BTC will rise back only when the BTC longs will fall. Your thoughts on that?
Oh, I don't know about that. I mean, Bitcoin longs charts, it's like the Bitfinex. It's not an aggregate of all exchanges. It's just one exchange. And really, the Bitcoin longs chart is a joke kind of anyway, because let me see if we can find this USD longs, right? Yep, there it is. With this, man, this is just like, it just counts the amount of levered positions on Bitcoin, right? So it doesn't factor in how much money is involved. So like, here's your Bitcoin longs chart. It's dumping, right? It's been dumping since March 20th. Make of that what you will, right? There's nothing here. You know, it finally stopped, right? And it's going down. So we have the least amount of levered longs on Bitfinex since May 30th of last year. That's all it means. I'd imagine on something like this, there was a liquidation or something of the levered longs that happened. And that's it.
Can we look at CDE Mitch? Also, any Bama players want to see get drafted? Roll Tide. 0.000605440 BTC.
So William, yeah, I mean Bryce, I'd like to see that, of course. Man, Bitcoin is about to be at 30K, dude, up $1,000, up 3.6% and climbing. I really don't use this chart. I don't look at it, and it hasn't helped me or hurt me. Like I think looking at this chart would make one draw a conclusion that makes no sense, or you would draw a conclusion that would be backed by speculation, and therefore, if you don't really know, I don't think it can help you, right? I don't think me looking at this chart doesn't help me like make a low risk long, strategize an entry on spot price. It doesn't. So I'm just not really that concerned with it. Think about how destroyed Bitcoin got, chat, between May of last year and June. Like, that's when the markup happened, when Bitcoin was crashing. This green Bitcoin long, like all these candles were happening during, I had like 3,000 people watching me last summer on June 18th. It was a Saturday, man. So it doesn't even make sense. It's like, what? Bitcoin was crashing. during this time. It was getting obliterated, so I don't even care, man. Like, I'm good. So anyway, thank you, dude. Let's go to CD. Yeah, I didn't have a good day today. Gold's got to go up, man. Gold, again, CDE on the weekly. Yeah, you want CDE to be above 363 because that's the weekly candle close from October 2014. And if it's going to fall below it, you get a 340. You do not want to fall below 340. Otherwise, it just kind of kills your argument for spring back tests. Levels that were support from years ago become support again. Yeah, so, whatever. While gold doesn't do anything. Gold just hangs out and it's going sideways, pausing at an 88% retrace. I think, like, if 340, 360 holds, 743 eventually, it just might take 2 years, which sucks. Gold might take 2 years to get to $3,000, $4,000.
Gentlemen in the mix.
CDE, man. Like this, you want to stay, look, because 2008's low. That's why 360 is important. Any bids gold catches. Look, think about gold as Bitcoin and CDE is some sort of crypto on the Bitcoin platform. I mean, that's the way you look at it, right? Where, altcoins are going to be more illiquid. They're going to be way more volatile. But, on the other side of the coin, they can be more profitable than just gold itself. Like altcoins can oftentimes become more profitable in the right circumstances than Bitcoin. Because Bitcoin, to double Bitcoin would have to go to $60,000, where Ethereum doesn't have to do near as much, or any of these altcoins. So CDE is just a play on gold, and it's technical. And I just showed you the technicals, right? So this is like gold, silver miner, whatever, precious metals. Let's go back to Bitcoin. Ethereum's also up 3.6%. Nice. Every loss was, look at the weekly here, okay, chat? This is getting real nice here. Anything above 28.8 on the weekly is serious, man. Very serious. What I love, remember we talked about this on Sunday when the close happened. The market participants on Bitcoin's weekly RSI, they back tested the bullish control zone. I mean, that is extremely bullish if this is real. Like, we reset and we're just holding 60. We're currently in the bullish control zone on the weekly. I think that's incredible. So, and if you're getting, remember, the bearish engulfing candle happened last week, but it is never about the bearish engulfing candle itself. It is never about the bearish breakdown itself. It is always about the follow through. And so far, there has been no follow through. Only so far, semi rejection. And getting a close above 28.8 this week, 4 days, would be amazing. Where I think 36,000 to 48,600 are your targets. That's your common retrace zone. That's the golden zone, man. So Bitcoin, still has a good 23 to 65% upside. And like at one of these fib nodes, I think it can have a massive major reversal to the downside again. But until then, we got 23+% upside on Bitcoin in the coming months. Okay, cool.
Remember, perseverance. Tar will pay off, brother.
What's up, Eric? Thanks, dude. TA does pay off. Yeah, it has. It will. It has, it does, and it will. Absolutely. Thank you, dude, for the 21 super chat. Whew. Oh, man, my laser turned off. What the beep? My old boss used to do that. All right, my old boss, he was my manager. He would always bleep out his curse word. He'd be like, "What the beep?" And then I started doing it, and I'm like, I got to break this habit, man. So I had to say, "What the?" Oh my God, my phone's about to die. This laser. Okay, so here's the problem with the laser. Like, if you don't have it, it has to be connected to Wi-Fi on your phone or on your computer. And when it's happening like that, it's connected to the laser. So it's not connected to the internet. So I can either go without internet on my computer, can't do that, or no internet on my phone while I'm streaming. I have this old phone but apparently, like, it's weird. Like, the Wi-Fi just doesn't work as well. It make like the old iPhone. It's weird, really weird. So eventually, I'll be able to, with that laser, I'll be able to have it on my Stream Deck. And, you know, when something happens, I'll be able to skip to... Dude, this laser does everything you could dream of. This was donated via Crypto Hoarder. This was a Crypto Hoarder contribution. Over $2,000 laser. And so I was unable to get it working up in Birmingham, but I figured it out. And now I'm trying to implement it more into the stream. We'll see what happens. You know, it's just kind of it's a gimmick, but it's cool. Lasers with sharks. Yep, maybe. Bear sharks. Oh, by the way, just wanted to say... Is that it, Brad? Only him? G-Dog, thank you so much for the resub on the Citadel for 4 months. And the contribution from earlier, man. Really appreciate it, man. You are a staple in our community. And thank you so much for being a part of it, because... You're helping other people too in the community. All right, so that's like the goal, man. Like you learn something, it's your obligation to teach it. Then it's like, oh, I'll start live streaming and teaching it, and then other people learn about it, and then they start, you know, in the community, they start like the principles that are taught. They become a disciple of the principles and help other people in the community. And then all of a sudden, years go by, and we have an extremely like smart, educated, well-informed community, and it's special, man. You know, it's not like, hey, a PewDiePie community or Twitch community, video game streamer community, but man, we have really successful, smart, rich people in this community, man. Like, just wish you would, I could get some more. You know, just tough right now, market conditions. Yeah, tap looks okay, but it hasn't broken out yet. Yeah, it looks strong. Strongish, yeah, definitely. Definitely does. Wow, dude. Only one person has joined the Discord today. What the? I know there's more than one person watching that's not in the Discord that needs to be in the Discord. You get notified when I go live. There's educational resources, and you're connected to like-minded individuals. Wow. Crazy. Oh, Bows and Dwarfer. Yeah, let's do it, man. Sorry, I didn't see that. My bad, dude. Let's go to EGLD. Let's do it, man. It's a crypto in a crypto world. Wow, what a loser, dude. I'm just saying, dude, this is a loser. Mega loser, man. I mean, yeah, it's a falling wedge or whatever. Supply line, okay. God, like, just look at this. Just so bad. I mean, you're at the areas, you've fallen below the 886. The 886 is way up here. I get why you requested it, because it's like, you know, interesting price action and could have consequences where he requested it because he's like, hey man, look at this ice line from, you know, Black Saturday times last year. Look how the sellers pushed the price below it, but they could not generate any more selling pressure. The buyers recaptured the level, and now they're back testing it as support, not once but twice. I mean, that could turn into, that's a spring back test, and you got to wonder what will happen off of that. I mean, I'll tell you this: if you were wanting to strategize it, man, it's very easy, isn't it? It's like, oh, okay, well, I'm just gonna have a stop loss somewhere marginally below the ice line that buyers have defended twice now. Easy. We don't know if it's gonna play out. $53.30, $68. Those are your targets if it does play out. But that's as far as I go with it, right? I don't know if this like EGLD, market participants defended the level twice. Like, I don't know if it's going to actually Because all it does is make lower highs. Even on the spring back, it's lower high, lower high, lower high. So below the 200-day moving average, it's garbage, man. It really is garbage, even though it has an interesting technical indicator going on right now. Yes. So you could do it like that, man. I mean, right, the stop below this low, but also maybe below the March 11th low. And then you can't take profit at 53.30. It's not equitable, but you would, right? Wouldn't the high $68 be the first target? 3.46 to 1 reward to risk. And also levels from history. That's the only way I could look at this and sizing it up. Bosendorfer. Sounds like the dude from Rookie of the Year, right? Rosenbach. Only real ones will know what I'm talking about. Okay, that's the only way to do it, and it's a tight stop, and it can get stopped out, you know, in a couple days. But why would you want to own the asset below this level? It's all about the whys. Why would you? Why would you do this? Why would you do that? Why would you have a stop there? Because the whole reason why one would enter to begin with is because buyers defended. What we know about what a spring back test is. It's a technical indicator that's powerful, and then you've done it twice. And just still sketched out because, wow, just local lower highs and, whoa. You'd be praying for Bitcoin to pump, but it doesn't even matter because, again, Bitcoin is up 100% from its December lows, right? 100%. EGLD is not up 100%. It's not even close. Oof. Bitter. Oof. Okay. So yeah, that's EGLD. It's kind of a way to look at it. All right. Was that the last request? Yeah, that was it, man. That was the last one, man. Okay. Well, yesterday was underwhelming. It could have been great. It wasn't great. It was scary, and it wasn't. Now we're breaking back above 28.8, which is always great, but you can't really sleep that well until Bitcoin takes out 31K because that's the high that was put in on April 14th. We got to take that out. Otherwise, it's an attempted rally, lower high, okay, distribution, we roll over later, but still very promising to see the buyers defend, or like there was just so much demand that the sellers were unable, on the bearish average, they were unable to push the price to even see the local support from March 18th, right? So a very subtle higher low gets put in, and that's just something to not be ignored for now. I mean, that really could turn into something special. Just pay attention to the subtle accumulation way up here. Live 8.5, please. Inflation and reading.
Hey Mitch, can I get some TA on Dogecoin? Hope all is well.
It is well, man. Just, you know, there are rules and I just have to abide by them. So it's like, you know, don't get mad. Like, it's not my fault. It's like literally there. Like, it's not like, oh, that should be surprising to you. It's just real life. Here's Ethereum, you know, still just in between two key levels. Above 2K is the promised land. My God. But you're not there yet. But it is nice. Like, just like Bitcoin making that subtle higher low, this is a lot more pronounced of a higher low than Bitcoin even. Interesting. So yeah, man, it's just like, we'll see. Very choppy, man. Very, very choppy. But fundamentally, conviction on Bitcoin, right? Like, who cares about the price? Really, when we're talking about what's happening to these banks, what this administration's doing, right? I mean, central bank digital currency is coming all over the West. The West has been compromised, man. The West are like the baddies now. We're like the baddies, like censoring political opponents, right? Whistleblowers, you know, completely, you know, just against that. Countless things, open borders, fentanyl, okay, teaching, you know, sexualizing children, all this bullcrap, man. This is crazy. Bitcoin, the answer. Bitcoin's number one, man. All right, so I guess I'll just leave y'all to it. I appreciate everyone coming out. Live 8-5, I'm giving you a chance to tip $5 more so we can look at Doge. Because you're not going to be very satisfied. It's pretty pathetic. I'll tell you this, I'd rather own Bitcoin all day over Dogecoin. Gosh dang it, man. Leave me in limbo at the end of my stream too. It's like, well, what am I supposed to do? Like, okay, I want to end the stream, but I want to give him time to like string the remainder of the contribution that meets the criteria, but can't just leave. Otherwise I look like a bad guy. There it is. All right. Thank you, dude. Here's your Dogecoin. I mean, still putting in higher lows than the lows from March, but dude, below the 200-day moving average. Big one's not below its 200-day moving average. What is it? Like, it's like all the others, man. I mean, sure, in this range forever, but when higher highs? When can buyers take out? I mean, 9.1 cents. There's just too much supply every time, man. Is there a technical setup for a long right now? Not really. I mean, maybe hidden bullish divergence is developing. The problem is, man, it's just the underperformance. Like Bitcoin dominance is telling the story here, and it's like Doge is like all these other altcoins. They're just not, money cannot on ramp into this market like it could before. So assets like Doge and Shiba and all the others, QNT, OXT, KCS, YFI, Maker, Tron, all of them, man, it's just going to be harder to move the meter higher because the money that can enter is probably getting in Bitcoin. It is getting in Bitcoin. It's certain. It's like we can see that Bitcoin dominance chart. Yeah, Elon would be the only reason. I mean, guess what? Why did this pump here? It was Elon. Remember, he put the Doge logo on Twitter for a day, and the day after the dump, and then the rally and the lower high and the sell-off again. It's just like, I don't know, I think it's just more simple Bitcoin, not Doge. Sorry, man, I just like, it's not at an actionable area for a fresh long. I hope it holds. I hope it puts in a higher low than 6.5 cents. You're in, but look, here's the thing, right? If there's not a discernible like edge, and there's not some way you can strategize an entry, stop loss, take profits, then all I can do is talk about the levels. And clearly there are two levels. What? 6.5 cents, 9.1 cents. History tells us that. And you are in the dead spanking middle. Therefore, you're in the most coin flippish casino gambling area you could be in. If you were to take a long or short right now, you are flipping a coin. Because what about 6.5 cents next or 9.1 cents next? I think there's a 50% chance of either one. So that when it's like, you always want to be looking at assets at inflection points. And then when they're at those inflection points, that's when you're wanting to look and identify structural, like the patterns, right? The reversal patterns and the oscillators, the momentum oscillators. And all at formal global 886s and stuff like that, value perceived areas. So this is not doing like any of those really right now. Well, that's okay. It could 50% chance it goes 9.1 cents next. Wow. Instead of 6. All right, thank you, dude, for the 15 live 8-5. Sorry about the confusion stuff, but the higher low, it's been put in. Let's see if it translates into a higher high next and a colossal Jesus breakout, because above 31K is a Jesus breakout where, oh, we're live. There's 1,500 plus people watching the stream. There's hype in the chat. People are losing their minds. What should I buy now? Oh my God, what are we gonna do? You know, party, crypto hoarder going nuts. You know, everyone. Bet Moonboy might return. You know, above 31K. Like I'm just saying, like that's what kind of stuff you're in store. What's in store for us? If market participants can absorb the remaining supply at 31K, there won't be much on the order book until $40,000. As you can see, the liquidity in between, straight up and down, many countless times. So Just pay attention to the level. Have your alert set up. So when you hear the beep, you hear it with me at 31.1. Oh my God, we're breaking out. Okay. Might be going live. That's why you want to be in the Discord so you don't miss the live stream notifications, because YouTube will fail you. All right. Godsu, like, what do you expect from me, man? What do you want me to do? Right? Like, practically, like, what do you really want me to do? We are saved, man. Wow, I love that. Okay, all right, we're good. Yeah, man, we'll all the time in the world for more requests and all that stuff, dude. I think we're at a really interesting spot. And if this is all real, 31K is the target, man. Like, if you're pivoting, making a higher low, this is a serious, like, development. I mean, like, a higher low has been put in. So there are more market participants April 22nd than there were in March, late March. A month later, there are slightly more market participants. More people own Bitcoin than before. But it's very subtle, and it's so subtle that if you're not really looking at it like we are here, you wouldn't even think anything of this. You'd be like, I don't know. Like, this could be serious, man. Pay attention to the sign of strength on the higher low here. Okay. All right. Well, fundamentally, Bitcoin's king. You know it. I'll be back. Until next time, respect the TA.
that process remains very mysterious to me.
Gentlemen in the mix. Oh, we had to do this. Oh, we had to do this. Do it. Oh, we had to do this. 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 Oh, we had to do this.
Which remains, that process remains very
Had to
mysterious.
do this. Oh, we had to do this.
Which remains, that process remains very mysterious to me. I do it.
Oh, we had to do this.
Do it.
Oh, we had to do this. Oh, we had to do this.